Good evening, everyone. We'll start shortly. All right, so welcome all once again in the weekly webinar of Week Ahead, the Religare Technical. So some of you might know that during this webinar, we talk about markets performance during the week, sectoral performance, top five gainers, losers from the Nifty 50 basket. Then comes the actual thing, means the expectations that we have for the key indices, both Nifty and the banking index for the next week, and then some of the stock which should be on your radar, for both long and short positions. So we'll start with a quick disclaimer first that during this webinar, whatever information that we share is for information only. Means it's for education only, and it's not trading or investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. Now let's start with the performance first. So this is the overall performance for the week. When it comes to the benchmark indices, second consecutive week of gains, and finally a decisive week, I would say, because earlier also we have had nearly 1-2% kind of a move. But last week we managed to reclaim the record highs. We saw the participation strengthening further. The broader markets were also okay. They were not very strong, but yeah, the participation was there. So all in all, it was a good week for the markets. Nifty made a new milestone today, 23,000 mark. Though on the closing basis, we ended tad lower. Sensex also around 75,000 marks. So coming to the sectoral performance, as you can see in the screen itself, that all key sectors ended in the green, wherein metal, media, energy, auto, and realty, they were the top five performers. There was a bit of a profit taking in the defensive like pharma and FMCG, but they also managed to end marginally in the green. Now coming to the top five gainers in the Nifty 50 basket, you have a couple of names from the Adani group of stocks, Adani Enterprise, Adani Ports. Then we have Coal India Supply and Divi's Labs. So a couple of names from the pharma space also, despite the underperformance of the sector, that was among the top five gainers of the Nifty 50. Now coming to the losing side also, interestingly, we had the first name from the pharma space itself, that's Sun Pharma, nearly 3% kind of a cut, followed by marginal dip in Nestle, SDFC, SDFC Life, SBI Life, and Hero MotoCorp. So in short, it was a normal, profit taking in the defensives, but the rate sensitives, aggressive ones, they were on the front foot during the week. Now, what we are expecting for the index. So this is important because it's not the daily graph that we usually show on the screen. It's the weekly graph of the index. And there's a purpose that why we are showing this, weekly graph. So notice this, that, it's been almost several months that Nifty failed to close above 22,700 mark, though the numbers are, the fonts are not visible, but still this zone, as you can see on the screen, this red line was 22,700. So on the closing basis, from almost several weeks, we have been seeing that the index was struggling to hold. Though there were attempts couple of attempts here, then this where we surpassed this resistance, but we couldn't sustain. This week finally, we have ended strongly above 22,700 mark. Downside on the closing basis, this zone 21,950, 900 was the area which we have been holding strong on the weekly basis. As you can see, there was hardly any close below this mark. So with this, move, we have ended 2-3 months of long consolidation phase. I hope it is clear. Again, I'll explain it for further clarity. That we have been seeing index inching gradually higher, but if you closely watch on the weekly chart, then we see another important aspect that on the weekly basis, Nifty was facing multiple resistances to hold and close our 22,700 mark. But this week we have managed to do the same. Downside 21,900 was a zone. So with this breakout, it has paved the way for a newer highs. So that we have already seen in the market, that 23,000 we have tested today. Upside, as per the range, it could be close to around 23,800 in coming weeks. Intermediate, we have multiple resistance to cross. First is the upper band of the trading channel. If you see on the daily graph, you will come to know that comes around 23,150, then 23,400, and then ultimately 23,800. So this is the kind of a journey that we are anticipating. So once we cross 23,150, which is the upper band of the rising channel, then 23,400 to 800 will be the next probable target for the index. Downside, earlier, this resistance zone should act as a support. So this 22,700, 800 would be the first zone, and then 550 closer to this mark on the closing basis where we had the last support. So it's a buy on dip market, and large cap, they might outperform from here on. In the last couple of sessions, anyways, we were seeing that the index majors from across sectors, they are leading the surge. So this might continue, in the coming week as well. So large cap and select mid caps means larger mid caps should be on your focus area, considering this decisive break in the index. But yes, we have important impending event also, the general election and its results. So obviously, it's not going to be a single-sided journey. We'll continue to see profit taking in between, but the tone is likely to remain positive, is what charts are indicating. So this is about Nifty index. Now let's dissect banking index. So in line with the Nifty, we have taken a weekly graph of the banking index also. It's a similar channel that we are seeing in banking index. We've almost tested the upper band of the same, few weeks ago, and then there was a marginal retracement to the short-term averages. And again, we are seeing attempts. So earlier, we had this challenge that banking was not participating in the move. The other sectors like energy, auto, realty, FMCG, they were the one which were pushing the markets higher, while banking and IT, they were slightly on the back foot. But now we have started seeing attempts from both the key indices, to further fuel the momentum. So with this, move, and especially the top performing, I'm sure by now that those who attend our webinar regularly know that top three names are Axis, ICICI, and SBI. They have performed well in the passing week. In fact, HDFC have also made noticeable improvement in the passing week. So all these factors are now pointing towards this journey of banking index also to improve in the coming week. So we are eyeing 49,500, this zone first. Could be the area where it might face resistance, and then the upper band of this rising channel, which is around 50,400, 500 zone. So in case if there be any dip, 48,300, and then this lower band, 47,400. These are the strong support zone for the banking index. But the bias is definitely turned positive. Still, Kotak, IndusInd Bank, they're still laggards, but with improvement in SDFC, we expect this, recovery to strengthen further. Now coming to stock specific approach. So obviously in line with our view, banking is something that one should definitely keep on radar because one, we said that the index majors are likely to do well and larger mid caps. So first name that you have on the list is Axis Bank. As you can see, the stock was, consolidating in a range, followed by a marginal dip towards the short-term averages, formed a base, and then a breakout. So it's a typical clear, you know, signal that this stock is set for the next leg of the up move. It's trading at the record highs, so it's outperforming the sector also. Plus, there was hardly any correction from the recent highs as well. So all these factors are indicating that this positive tone is what we are seeing in excess is likely to continue. So this is one stock that should be on your radar for long trades. Next, Chambal Fertilizer. So we were seeing decent traction in the fertilizer space altogether today. But Chambal is otherwise also was among the decent performers of late. So why? Because post this consolidation breakout, very strong surge followed by marginal retracement to the short-term averages. Again, a base formation followed by an up move. So that around this area we have covered in our previous webinars. Now again, we have retraced marginally in the recent week, offering fresh buying opportunity to those who missed the chance earlier. So it's a healthy and normal correction because see the volumes were missing during this decline. So we believe that it's a good buying pivot. So it's very important, why we are talking about stocks which are largely and slightly in the back foot right now, because you might continue to see the struggle in the mid cap and small cap space from here on, even if the index continues to inch higher, because there could be very selective participation. If you remember that in yesterday's trade, it was Reliance, L&T, SDFC, select heavyweights, were the among the top performers while the markets were on the sidelines. So selecting right stock, where the risk reward is also favorable, is very critical from here on. So Chambal is one such name wherein we see favorable risk to reward. Uh, if somebody is planning any long trade. Lastly on the list, Gujarat Gas. So again, a similar kind of a structure that we saw in Chambal that posts a very strong up move. We are seeing a very narrow range consolidation while holding above the short-term averages on the weekly chart. So it's a kind of an indication that the accumulation is going on, and in the next leg, we'll see the resumption of the uptrend. So apart from Chambal, this is one such stock from the mid-cap basket which one can look at. So just to sum it up, our view is positive when it comes to both Nifty and the banking index, 23,150 first, then 23,400, and then 23,800. This is what we are eyeing in the index. Dip 22,750, 50 first area of support should be the area where one can look for long positions. Major at 23,550. Banking 50,400. The ultimate resistance, the upper band of the channel. Lower band, we have multiple supports at 47,400. Among these stocks, Axis Bank was the first that we had on the list, followed by Chambal Fertilizer and Gujarat Gas. So this is all from the presentation part. Now we'll have a quick feedback poll. So please fill in your feedback and then you can start posting your question using that Q&A tab. And as I always recommend that stick with stock specific, sector specific queries, not stock specific queries, so that we can end the session on time and it is fruitful for the larger audience. So please fill in your feedback and then we can start with the Q&A. And And those who are done with the feedback, they can start posting your questions in that Q&A tab. All right, so yes, so we already have a few questions in queue. So we'll first start with the question from Mr. Aya that buy IT stock firstly wait and also review on the AMC stocks. So yes, see IT as a pack, at least we have discussed a couple of weeks ago also that they are showing a sign of bottoming out. Bottoming out means it's not a reversal yet, but at the same time, the possibility of further decline seems very low. So there could be, intermediate pause or consolidation in some of these, IT majors, but largely we are expecting them to reverse, from the current levels. So there could be a bit of an underperformance during this phase, wherein the markets are already at the record highs, but we are still, uh, trading way below the major averages when it comes to the IT index and the IT majors as well. So this underperformance should subside once we see the reversal. But as of now, it's a phase of accumulation. So if your time horizon is, let's say, for 3 to 6 months, definitely one can consider accumulating IT majors and selectively, some of the mid cap IT names as well. At AMC's stocks, they all are doing okay. In fact, some of these names they are still trading to the record highs like NAM India and others. I feel that one needs to be selective and the performers, wherein we are seeing consistent traction with marginal pauses. So, NAM India, SDFC, AMC, these are some of the names which we are seeing consistent performance. So, definitely you can consider those names for accumulation based on your risk appetite. Okay, so next question is the stock specific, but anyways, we will answer this as a sectoral query. Mr. Dayakar has this question on PSU banks and power related stocks. So see, PSU bank is one such space where we doubt that there'll be outright very strong performance is what we are seeing the private banking majors. So I would recommend to stay selective in this space. The easiest way to identify the performer is that which stock within the PSU basket is trading at its record highs while the index is still struggling. The answer is SBI. Answer is, we are closer to the record highs in Canara Bank, Bank of Baroda. So based on the recent performance, we expect if, this, PSU also participates in the recent rally, which they usually do, means the quantum of rise, varies between, 5 to 10% in between during this up move. But largely they participate. So stick with the performers. And the rest of the names, they may look attractive based on the absolute number that some of these stocks are 50 rupees priced at 50 or 60, 70. But eventually the return, the consistency is what matters most. So SBI, Bank of Baroda and Canara Bank, they have shown their consistent performers alongside with the Indian Bank as well. So Nirmala Devi ji has question on fertilizer stocks. So we've discussed about Chambal fertilizer, and yes, today was the day that we had broad-based buying across the fertilizer space. So we may continue to see this traction continuing in the coming week as well. But since we all know that they are high beta counters, means they witness excessive volatility both on positive and negative side, be very strict with your stop losses when you are trading it for short term. And okay, the ancillary space, especially the battery part. So yes, the battery majors, they are doing well, be it Amaraja, Exide, but after these strong swings, uh, especially for Exide, we feel that keep on trailing your stop losses on rise. So what we mean by trailing stop losses means you have bought it at 100 and the stock goes to 105. So instead of waiting for a stop at 95, which was your original stop for 110 as a target, you should trail your stop loss to 100, because this choppiness might continue, and especially we have an impending event. So stocks which are high beta in nature, one should definitely think about protecting your capital and your profit, uh, from any kind of volatile swings that which may occur in the coming days. Okay, chemical sector. So chemical sector, we're still seeing mixed trend. There's no clarity over the overall sectoral trends. So again, I would say that stick with the uh, performers or stocks which are seeing consistency in the trend post earnings. So Tata Chemical, then selectively we are seeing Navin Fluorine and Deepak Nitrate. Some of these names where we are seeing consistency, though the momentum is missing, but yes, they are holding strong. But I feel that if the view is short term at least, so I would prefer the other sectors like metal, uh, auto selectively. Means there's no sector as such, especially for the coming week, because within the sector we are seeing mixed trend. But yes, the performers like banking, financials, IT. So I would prefer others in comparison to chemical if the view is short term. Okay, Mr. Lal has question on pharma for the coming week. So this pack is also showing mixed trends. So as we shared it at the beginning of the presentation that we had a couple of names among the top performer also from the pharma space, and then we had Sun Pharma among the top losers also. So obviously it's an earning reaction, but largely we feel that pharma as a sector is looking positive to us. But within the sector, identification of right stock is something which is more critical. So it's been volatile week for some of these pharma stocks like Lupin and Sun Pharma. They have reacted from the recent highs very sharply. At the same time, Biocon, Granules. So these names which didn't perform well in the past, they are witnessing catch-up moves. So one can plan their trades accordingly. Okay, so next is we have a query from Khyati on cement space. So see, this space is overall doing very well, and if you are holding any strong which is not participating, uh, for some reason or the other, and if your view is short term, then definitely you should plan to switch to the performers. So if you are holding, let's say, Ramco, Dalmia, or any of these names, I would prefer that anything like Ultratech, ACC, Ambuja, these are the names that one can look at from the cement space if the view is short term. Okay, next question from Mr. S. Boral on FMCG. So FMCG, again, it's a mixed bag, but largely, stocks are doing well. So Marico, Godrej Consumers, Britannia, Imami, HUL, Dabur, they all have done well in the recent weeks. And ITC post numbers, we are seeing a bit of a profit taking, but the tone is still positive. So if your view is long term, then definitely you can consider the top performers within this space. For short term, I feel that Marico, Godrej Consumers, Britannia, they are the better candidates to look at. Okay, next we have question from on private banking majors. So see, during the presentation itself, we've discussed about Axis Bank being the top name among the shares like Axis, ICICI, and SBI. So if you are holding any of these three, definitely you can continue to hold, because in case if there'll be any further outperformance from the banking, these top three stocks are likely to lead from the front. Okay. Mr. Rahul, on piping sector. So see, there's no as such sector, means we have had some of these stocks which were earlier into purely into this space, but now they've diversified their operations. So very limited stocks that we have, which caters to this space. So as of now, what I can recall, that Phenolics Pipes, then we have Jan Irrigation, all these names, they have done already well. So fresh buying, I would suggest to avoid for a time being now. Okay, so Mr. Ajay Gupta has given this feedback. So thank you so much. This means a lot to us. And now he has queries also on metal and FMCG. So see, FMCG we have already discussed, Mr. Gupta, and now when it comes to metal, some of these stocks they have done phenomenally well. Means they were among the top performers. So be it Hind Zinc, Hind Copper, and it's largely due to the outperformance of the base commodities, base metals that we have seen. They have seen a phenomenal rise on the commodity exchanges. But now we have started seeing a bit of a cool off in the commodity prices, which is reflecting in the stock prices as well. So we might see a bit of a cool off in some of these outperformers, but still we have certain pockets like Tata Steel, SAIL, which didn't participate much. In fact, yeah, SAIL did exceptionally well. It has reached to its record highs after almost several years. Tata Steel, I feel, is comparatively better among the metal space. Then we have stock like Hindalco, Jindal Steel, JSW Steel, which comes second. So these are some of the names that you can selectively look at. But do remember that we are entering into a key event, and they are highly volatile, sector and stocks. So plan your trades accordingly. Be very strict with the stop losses. Okay, so Mr. Sushil has this question: with the positive market outlook, what is the right time to book profit? See, the right time to book profit is once your stop loss gets triggered. Means, see, what I am, looking at from the 1 to 2 weeks perspective, that the market might inch toward 23,400 or 800 mark. But my view would change once we break this, 22,700 zone, because the positivity that we were eyeing, that we made a decisive move above 22,700. If we close below this mark for a day or two, then obviously we have to relook to our readings. And there's nothing wrong, accepting your that your reading was not right, or there were certain other factors which contributed to that move. The first and foremost, approach that we should definitely maintain if we are trading is to preserve our capital. So we'll have multiple opportunities to re-enter if we, realize and accept our mistakes. So the best time, see, like just to give you an example about Nifty, as I've said that currently I'm at 23. Once we break 22,700, my view would change, and obviously I'll exit my position. So accordingly, if you are holding, let's say, 10 stocks, and especially when we are entering into a key event where the volatility index is still at around 21, there could be sharp reactions in case if something goes wrong, which is not as per the market expectations. So do maintain very hard stops. Hard stops means you have written it somewhere, where I'll be exiting without a single thought that, let's see where it closes today or something like that. So this is, I hope this answers your query. When to book profits. Okay, so next, again, a private banking major. So we have discussed, Mr. Bharat Bhushan, that after a long period of underperformance, we are seeing now, some of these private banking majors which were struggling earlier, including Kotak, SDFC, IndusInd Bank. They are also trying to make a comeback, and especially when the FIs, re-enter into the market, their preference always remain the private banking counters. So yesterday was a good number from the FI desk in the cash buying. If it continues in the coming week as well and post the elections, then definitely SDFC Bank would benefit. But as of now, if the view is short term, I would still suggest that stick with the performers, which is Axis, ICICI, and SBI. Okay, next we have about the defense sector. Stocks are at the 52-week highs and going up. This question is from Dollar. So yes, you are right that we have been seeing consistent outperformance from the defense, the power finance companies. But as I've said earlier also, that we should know where to exit. And for that, the best thing that we can do is to keep on trailing your stop losses. Momentum is intact. There's no sign of exhaustion yet because we have had strong gap ups also, but still the stocks are maintaining the positivity with strong volumes. So this indicates that the bulls are completely under control. So you can continue to trail your stop losses and ride this rally. So there's a query from anonymous attendee, and I've already answered this, that we have seen strong 30-40% kind of increase in a lot of the power, energy, and defense stocks. So how do we see that coming week? So hope it answers your query. And next, okay, Mr. Sushil has query on small cap and mid cap. So as we've suggested during the presentation, Mr. Sushil, that in the coming weeks, since we have ended a major consolidation in the index, the preference should be given to the index majors and large mid caps, not small cap and mid cap names. Because from the last couple of sessions, you must have noticed that the small cap and mid cap counters, they are underperforming also. Though they are still holding around their record highs, but we feel it's time for large cap to witness a catch up move. So the preference should be given to the large cap and larger mid caps. Okay, so largely we have answered all the queries. There were a couple of queries on stock specific, which we have missed. Otherwise, we have answered all the queries. So yes, with this, we end the session. Thank you, everyone. Next week is going to be a session on the market rollovers, derivative rollovers. So do join us at 4. Till then,